Good morning, and thanks so much for tuning in. You're watching Trade Talk. My name is Alex Matthew, and this is BQ Prime, of course. With me is Hiral Dadia. Hi, Hiral.
Hi, Alex. Good morning.
Good morning, and happy Monday to everybody tuning in. The earnings season's out of the way last week, of course, and the attention turns to several other factors. Today, I guess the big talking point is going to be the JFS listing. Later in the week, you're going to have, from the global point of view, I think there are two aspects that are playing out here. One is the China factor and how bad that slowdown is. And of course, in the US, you have Jackson Hole Symposium, which takes center stage, but that's towards the end of the week. We're still looking for direction.
Absolutely. And if you see in terms of the direction, it's absolutely, we are absolutely mirroring what's happening in the global markets, right? If you see in terms of Indian markets, 4 consecutive weeks of decline is what we've already seen in the markets. Clearly, it's the metals as well as the financial stocks that have been underperforming so far. Now, if you talk about the key indices, it's a broad range where they are stuck in. And till the markets do not find a major trigger, the consolidation that we've seen in the last couple of trading sessions, that is expected to continue as well. From a structure perspective, if you see, that is still intact, which is interesting because, we will not be surprised to see some buying that could emerge at lower levels as well. So buy on dips, sell on rally, that's the strategy that investors are still continuing. Now, 19,250, that's the critical support that we are watching out for. Any drift below 19,350 would result in a sharp correction that could lead Nifty to almost 19,100 to 19,000 levels in trade. Now, the put writers are also seen exiting positions from 19,400 and 19,500 strike, which is telling you that there is not much confidence that's coming in there. If you talk about Bank Nifty as well, there is that indecisiveness that is looming in terms of Bank Nifty. And a strong close, if you see above 44,000, is absolutely required for Bank Nifty to see a change in terms of trend is concerned. If Bank Nifty breaks below the 43,500 level on the downside, then we can go to 42,600 as well. So these are key levels we should be watching out for. But from the options end, if you see the highest put OI on Nifty is seen at 19,300 and the highest call OI is at 19,400 as well. So these are few of the levels we should be watching out for. Key is there is consolidation right now in the markets. A major trigger is required as well to see the upside. And thirdly, the overall trend still remains intact, where people are still looking to buy at lower levels and sell on rally.
And we're considerably off, if you think about it, about 600 points off, or thereabout. In fact, more than that, 690 points off the high point that we hit not too long back. And we've seen 4 weeks effectively of consolidation. So that time-wise consolidation and, in fact, the small price correction also has taken place. However, like we said at the start, the big talking point at the start of today's session in the first 1.5 hours or so is going to be the Jio Financial Services listing. And Mihika is joining in to give you some perspective on what to expect and also the scenario for JFS as it enters the fray as a listed entity. Good morning, Mihika.
Good morning.
What would you start with? Would you talk about how it lists and what happens over the next couple of days?
Yes. So previously, after the demerger from Reliance Industry on July 20, a special pre-open session was held, which gave Jio Financial Services a ascribed value of 261.85 rupees per share. This was a 96.87% premium to Reliance's apportionate cost of rupees 133 per share. A similar special pre-open session will be held today as well as the stock goes, as the company goes live from 9 to 9:45 a.m. The session is for the purpose of the price discovery and will determine the price at which Jio Financial will list finally on the exchanges, and then the stock will resume normal trade from 10 a.m. Before I talk about the stock's removal from the respective indices, let me provide some background. JFS is currently listed under a dummy ticker due to its price discovery session that happened on July 20th. However, the shares were not transferred to the eligible Reliance shareholders, and since permissions were pending, the JFS stock remained in the benchmark indices Nifty 50 and BSE Sensex as a dormant stock. Starting today, JFS will be retained in the index for 3 trading days. The stock will remain on the index at its constant price of 261.85 rupees till the listing price is determined, and post that it will trade normally. In order to have a smooth transition, the stock will be removed from the indices, as I mentioned before, after the third trading day. In case the share price hits the circuit on the first 2 days, then the exclusion from the indices will be again deferred for another 3 days. However, if the stock price hits the price band on the third day, but not on the first 2 days, not in the first 2 consecutive days, the stock will be removed from the indices. Earlier, FTSE had also announced that it would slate the stock from its indices, but after Jio announced that it would list today, it has revoked the declaration and the stock will remain on several FTSE global indices. The stock will also be added to MSCI Global Standard Index from August 23rd. Furthermore, the derived value of 261.85 rupees per share brings Jio Financial's market value to rupees 1.66 lakh crores today, which is nearly 20 billion. This makes the company the second largest NBFC in terms of market capitalization after Bajaj Finance. However, the story on the ground could be different a few months down the line. JFS does plan to foray into the digital payments bank and operations space. The company has also applied for an insurance license as it plans to expand and enter into this segment. Furthermore, it has also announced a venture with BlackRock as a point of entry to India's asset management industry. So, although these business expansions might take time to fructify due to the regulation requirements, the digital payment banks like Paytm or even banks like HDFC and ICICI Bank could also be viewed as Jio's competitors in the future as their business model has integrated insurance and asset management businesses.
Thanks, Mika, for getting us the details. So this is going to be very interesting to see how it pans out, because I was just reading one of the reports by Jefferies as well, which is clearly indicating that with a market cap of 1.6 lakh crores, they're seeing a core book valuation at 1.9 times price to book so far. And apart from that, value of the 6.1% stake that it has in Reliance Industries, that itself is valued at around 1 lakh crores, which is almost 63% of the market cap, right? And the promoters hold the remaining 46%. So the entire journey from here on is going to be interesting, because my conversation with Aditya Shah from, on Friday also indicated that the way they will derive value for it and what the future value for the company would be will actually depend on a lot of businesses that they undertake, because currently it's a clean slate for them. Not a lot of businesses where they've already forayed into and started doing business.
And I think the one more important factor to watch, at least in the AMC space, I know a lot has been said about the BlackRock joint venture. One, it hasn't yet taken off. It has to get regulatory approval. SEBI has to approve it. That could take a little while. In fact, some estimates point to next year, maybe second half is when they could get things moving. The other aspect is that they want to play in the index space or the passive space, which is BlackRock's strong point, which is generally a very low margin business. So how much money will they make as a business house? Of course, scale is what they are aiming at, but it's not very easy to get that scale because the incumbents have been there for quite a while, and they've stated quite clearly that they're ready to pivot to account for anything that a new entrant will do.
Absolutely. It's a value versus time kind of a play that we should be watching out for. So that's with regards to Jio Financial Services. Watch out for a detailed coverage on BQ Prime today as well. But moving on, you have Titan, another nifty 50 stock that is in focus in today's session. And that's on the back of the additional stake that they've purchased in CaratLane, Alex. In fact, Saloni is joining us to get us more. Saloni, what's the rationale? What is their strategy with regards to jewelry business that's made them actually increase their stake in CaratLane?
Right. So Titan did sign a share purchase agreement on the 19th of August with the founder of CaratLane to acquire all the shares held by him and his family members. That is 91.90 lakh odd shares, representing 27.18% of the total paid up equity share capital of the company, for a total consideration of rupees 4,621 crores. The acquisition increases Titan's shareholding in CaratLane from 71.09% to 98.28%. So Titan first invested in CaratLane in 2016 when Titan acquired 62% of CaratLane for a consideration of rupees 357.24 crores. So talking about the financials of both the companies, CaratLane's total income surged by 71.8% to rupees 2,177 crore in FY23, And Titan's revenue from its jewelry division grew 37% year-on-year to rupees 31,897 crore, and this revenue accounted for 88% of its total revenue in FY23. Now, Titan's jewelry division comprises an array of distinct brands such as Tanishq, Mia, Zoya, and CaratLane. The division continues rapidly expanding in its network presence and successfully added 100 new stores to its network. The company's goal for the next year includes expanding space in 15 existing stores and opening over 40 new stores.
All right, so that's some perspective on the business. Again, an interesting space. Thank you so much, Saroni, for that. Because if you look at the kind of changes that are happening in this jewelry business, and we've spoken about this, I think, is that people are more players are moving towards that franchise model, and that studded business is becoming more and more important for the traditional players as well, as they see higher margins in that product range. So CaratLane will be interesting because again, it's studded jewelry, right?
It is studded jewelry, and what's happening is it's slightly on the lower cost side. So gifting purpose, online purchases, that side of the business probably is what Titan is looking to grow, and that's one of the reasons why they're seeing an increased purchase.
So covering the whole gamut, right? Okay, so that was the story on CaratLane and Titan, of course. So watch out for.
And an interesting story I think we recently had done was whether to invest in gold or as opposed to jewelry companies.
Yeah.
And clearly the trend that emerged out of it as well was that the jewelry companies have given a higher return as compared to investments in gold from a short to medium term perspective. So that's an interesting aspect for anyone to consider, specifically likes of a Titan, Kalyan Jewelers, etc.
Maybe it's the 20% making charges, Hiral, who knows?
Probably.
But anyway, let's talk about bulk and block deals, which if you've been watching this channel for the last few weeks, you'll have noticed that there are a lot of bulk and block deals that have taken place. There are several to talk about today as well, and Varsha has all of them in a list. Morning, Varsha. What do you have for us?
So, a few of the bulk deals that took place on Friday. So, the first one is GMM Pfaudler. Now, Pfaudler has sold almost 13.56% equity of GMM Pfaudler via block deal on Friday. On completion of the share sale, the shareholding of the Pfaudler in the company is now at 1%. Also, among the buyers in the deal included Geranium Investments Limited, Atreides Investments, BV, and Infinity Partners, which are the funds controlled by Chris Capital. Shares of the company tanked almost 11% in the early deals on Friday to hit a 52-week low at rupees 1,350 on the BSE following reports of the bulk deal. Also, the stock later recouped losses and traded around 2% lower. As a result of Pfaudler's shareholding falling below 10% in the company, two of the company's non-executive directors, Malte Vovries and Harsh Gupta, have resigned. The next one we have is Jayaprakash Associates. Now, Prarthana Enterprises sold almost 1.6 crore shares, representing 0.6%, and this was bought by Jainam Share Consultant, almost 0.6% at rupees 7.96 a piece. Also, Prarthana Enterprises did one more deal in Zoya Healthcare, where it sold 3 lakh shares at rupees 465.55 a piece. The next one we have is Sterling and Wilson Renewable Energy, wherein Khurshid Yazdi Daruwala sold 10 lakh shares, which represents 0.5% at rupees 345.04 a piece. Then BF Utilities, BF Utilities saw 2.2 lakh shares exchange hands on Friday. This trade led one investor, that is Ved Prakash Agrawal, owned 0.6% of the company at 595.64 a piece. Post this deal, the stock was up 3.51% on Friday. Then we have Shriram Properties, where Sammy's Dreamland sold 10 lakh shares at rupees 73.46 a piece. The last one we have is SJS Enterprises. Now, Ashish Kacholia, who is famously known as the big whale of the Indian stock market, sold part of its stake in aesthetic solution provider, that is SJS Enterprises, for rupees 11.6 crore through the open market on Friday. Now, he sold the shares at a premium of 1% to Thursday's closing price of the stock. Also, on Friday, shares of SJS Enterprises ended around 1% higher on the NSE at 639.65. As on June end, Kacholia held almost 4.34% stake in the company, which made its debut on the bourses in November 2021. If if you see the year-to-date performance, so shares of the company have given nearly 30% returns to investors.
That's an interesting one to watch out for as well. Thank you, Varsha, for getting us the details. So these are a few of the bulks and the blocks that we've been watching out for. But apart from this, a lot of action that we've seen in Adani Group of companies in terms of Friday's session as well, where you did see GQG picking up stake. In fact, if you see the performance, a few of the names in terms of Nifty 50 did come in from there. Market cap addition was to the tune of almost, if I'm not mistaken, 50,000, crores. So good addition coming in there on Friday. I think Rishi has more details on it. Rishi, what do you have for us?
So, as you said, Adani Ports, GQG picked up an additional 0.1% stake in Adani Ports. This increased the total GQG stake in the company to 5.03%. Now, apart from this, there's also Adani Power, where there was some selling from the promoters. So, firstly, there was Worldwide Emerging Market Holding Limited, which sold 1.21% stake, which reduced its overall stake from 5% to 3.79%. Then there's Afro Asia Trade and Investment Limited, which sold its entire 6.88% stake. So eventually, the promoter shareholding it fell to 66.88% from the previous 74.97%. Now, then we also have a couple of other stocks that are in news. Particularly, there's the Murugappa group of stocks. There are about 11 stocks under this group. So the Murugappa family's members have agreed to settle all the disputes which arose post the demise of Mr. M.V. Murugappan. So basically, after the demise of M.V. Murugappan, there were basically two branches within the family group, and there were disputes with Miss Valli Arunachalam sorting a representation on the Ambadi Investments, which is the holding company of the Murugappa group, post the demise of her father. Now, according to the latest update, the members have agreed to withdraw all the legal proceedings post after all the agreed steps under the family settlement have been taking place, and particularly they have also committed to undertake all the necessary transactions under the settlement within the next 90 days. So the 11 companies that are under the Murugappa group companies are likely to express a sigh of relief finally. Then there's KEC International, which secured new orders worth of 1,000 odd crores, and these orders are part of three of its businesses. So firstly, under the civil business, it received order for design, engineering, procurement, as well as construction of a multi-speciality hospital in India. Then there's a transmission and distribution segment. It secured a substantial order for a 380 kilowatt overhead transmission line project in the Middle East. And finally, under its cable segment, the business has secured orders for supply of various types of cables in India and overseas.
All right. Thanks so much, Rishi, for that. In case you were curious, some of the stocks in the Murugappa group are Tube Investments as well as EID Parry. There's Shanti Gears, there's Carborundum Universal, Cholamandalam Investment, there's Coromandel International, TI Financial, Went India, CG Power. So a very diversified group, of course.
Yes.
And this is something that has been plaguing that group, if you can call it that, since 2020. And this is a settlement that I think a lot of the minority shareholders will also be satisfied with. Of course, I believe Valli and her sister have about 8% in that holding company. So it is a minority stake, but it is an amicable settlement. So that is positive. We've got a lot more stocks to talk about, and we've got Himansh joining in to give us some perspective on that. Himansh, good morning.
Hi, good morning, Alex. So I've got a clutch of stocks I'm tracking. So firstly, PNB Housing Finance. The company is put off a bunch of bad loans, summing up to 784 crore rupees via a sale to asset reconstruction companies. Now, this represents 1.3% stake, not stake, but 1.3% of the overall loan book. Then Spandana Spurti Financial, the ICRA has upgraded the ratings and revised the outlooks for various instruments from positive to stable. The long-term funds based of rupees 2,105 crores have been upgraded from ICRA A- to ICRA A, while non-convertible debentures of almost 380 crores have been upgraded in a similar manner. Now, this, besides a potential positive impact on the stock price, brings in a host of benefits for the company, where a rating upgrade improves the credibility. It also makes it easier to raise funds from capital markets and also reduces borrowing costs. Now, ONGC Videsh has secured a 3-year extension to explore oil and gas reserves in Block 128 of the South China Sea. ONGC informed this on a tweet or on the platform X now, formerly known as Twitter. And this is the 8th extension it also added, and it's valid until June 15, 2026. Now, this is in the Vietnamese part of the South China Sea in the contested waters, and we'll see how ONGC, brings out more reserves in this block. Then we have Axis Bank, where the Competition Commission of India has imposed a penalty of rupees 40 lakh on Axis Bank for failing to notify the regulator about its acquisition of stake in CSE e-governance. The watchdog said in its order that the transaction under the consideration comprised 9.91% stake in CSE e-governance, and it was completed in November 2020. However, the leading private sector bank failed to inform the trade regulator of this transaction. So let's see how the stocks react to these developments in trade today.
Thanks so much, Hemant, for bringing us those updates. All right, so we've covered a lot of ground, and despite the fact that we're still searching for direction, there is a lot of stock-specific action that you can look forward to in trade today, and you'll find all of that live on the platform DQ Prime, so do stay tuned.